everyone, and welcome to our first episode of Market Insights Travel Edition. Today I have with me Cornelius, who recently travelled to the UK to attend the Latin America Conference held by UBS. Cornelius, you saw about 16 companies. What were some of the key macro takeaways from the conference?
Firstly, I'm a bit offended that you haven't complimented me on my nice London socks. The key macro items that stood out was the Argentinian situation remains very fluid. Inflation is coming down nicely and has surprised to the downside, which increases the probability of Malay winning in the midterms at the end of the year. When it comes to Brazil and Mexico, us South Africans can feel better because we're not the only country to struggle more than 1% per annum. Brazilian interest rates are at 15%. They only hiked it a bit more recently. And that means their real interest rates are north of 9%. So that makes it very difficult for the economy to grow. It also makes it very difficult for equity investors to justify buying equities instead of just bonds in Brazil. And then with Mexico, we are in a bit of limbo with the USMCA negotiations. Agreeing on trade terms will be the next catalyst to drive credit growth and investment growth, and therefore economic growth in the economy.
Brilliant. Thank you so much for that macro overview. Maybe you can give us some insights into some key sector themes that you saw and any companies that stood out to you.
So with this high interest rate environment in Brazil, a lot of the banks have performed very well, and our emerging market fund has benefited from that somewhat. But we think we're now at a point where we are close to interest rates peaking and coming down next year. And we've seen valuations in Brazil come off a lot, and especially in the challenger fintech space. So we've actually started rotating the fund out of the banks into some of the newer companies like Pags, Stone, XP, Nubank, Meli. Those are all companies that we are considering. And then we also had a catch up with a company we first met in Miami 2 years ago, Gentera. It's a group lending company, mainly operating in Mexico. And it's still business as usual, a lot of run rate for them to continue growing earnings at 15%. Valuations have drifted up for them. The share has more than doubled over the last 2 years, but we still continue to like them. And then there's some very well-run Mexican banks. So a company like Banorte generating 22% ROEs, still growing earnings north of 10%. And they're trading on a price to book of 1.6. For context, First Rand in South Africa trades on 1.8 with similar levels of return on equity, but Mexican bond yields are slightly low, so discount rates. So we think there's still good opportunity there. So we also met other interesting companies in the dentistry space, etc. But that's probably too much for this videos.
Great. Great. Thank you so much for that. I think your insights have been really helpful today, and I'm glad you enjoyed your trip. To the audience, please look out for our next few videos of Market Insights Travel Edition, where we'll be exploring some of the other countries our team has visited. Thanks so much.